Hey, good afternoon, everybody. Thanks for joining us for this month's Riffin on Real Estate call. It's 12:59 Central Time. So we'll get started in just a minute. So bear with us as we start right at the top of the hour at 1 o'clock here. Thanks, like I said, thanks again for joining us for this month's Riffin on Real Estate. We've got Spencer Rolfe. So we'll get started in just a moment. All right, I've got 1 o'clock Central Time. Thanks. We'll go ahead and get started. I'm super excited to have Spencer joining us today. Spencer, this is going to be a great conversation. There's lots going on in the news, lots going on the basketball court. We'll save the latter for later and the former for right now. How are you doing today, Spencer?
I'm doing well, John. How are you?
I'm doing great. Well, let's get started. The news of the day, the CPI posted. I think it was a good number. It was higher, but lower than people expected. What's your initial reaction to the CPI and especially how it relates to the way you guys think of the world?
Well, it was definitely a CPI print that the market appreciates, as you can see from how the S&P and the Nasdaq a little bit have been rallying today. Really, I think holding on to whatever good news that can be found out there this week. But certainly, the CPI print does suggest that maybe we see some moderating of inflation, at least moderating to the extent that the market would like it to. Obviously, that's good for markets and for rates. So, we'll see where we go from here. We have the producer pricing index coming out tomorrow, so we'll see what happens there. And as that index tends to lead a little bit of what, if any, inflationary pressures the consumer tends to feel. We'll see if that number tomorrow doesn't undo the progress that we did today.
Yeah, it is kind of interesting how the markets react to that. Well, that leads to we're seeing lots of volatility. I mean, tariffs, consumer health isn't that great. Rates are kind of gyrating a little bit. They go up, then they go down. That spread between the 10-year and the 2-year and the third, are we inverting again? What's going on? How are you guys approaching the market with all that noise going on right now? And March is not always a good month for markets either.
No, definitely cannot be. But look, I would tell you that we're far from sitting on the sidelines. We are active in the market, but I would tell you that we are approaching things from a very defensive posture, and it's a picking your spots type of posture. And so we don't have any particular special insight into tariffs or where the economy might be 3, 4, 5 months from now, over the summer into the fall, when you might actually start to see some of the impacts of tariffs start to flow through to the economy. But like I said, we're staying defensive, and within that posturing, I think there are interesting sectors of the real estate and the real asset market that are interesting. One of which we can talk about is billboards.
Yeah.
We've liked the billboard market for a long time, and we think it generally has characteristics of a defensive type of market. And so billboards, very basically, outdoor advertising. These are businesses that own billboards and other signages. They lease space, and then they rent out that space to advertisers. So it's primarily an advertisement business, and it's tied to advertising. Advertising, as we know, can also be a cyclical market. One of the things that we like about the billboard market is that it's generally a high churn business. So if you're renting space on a billboard, you might only be renting it for a couple weeks to a month, maybe 2 months before it goes on to the next person. And when you have a dynamic where you're churning your contracts every couple weeks or every month or two, that gives you a very quick opportunity to reprice yourself, which can help offset inflation. And so we've generally seen billboard companies be relatively inflationary resistant, able to pass costs on to the end consumers. And in addition to that, it's not really a very diversified market in the sense that there's really only three or four main players who comprise the majority of market share here. Clear Channel Outdoor, there's Lamar Advertising, there's Outfront Media. Over in Europe, you have JC so it's not a very diversified market. There's only a few people that you could really pick from, and capacity in this market is not really increasing that much. We're not out there building new highways, and there are regulations like the Highway Beautification Act that actually limit areas of highways to building billboards. So you end up having a relatively capacity constrained market, which can be interesting as well.
So how do you think about when you're pricing those stocks, or I'm sure alternative investments around those? How are you thinking about it? Is it PE ratios? Is it earnings? Like, what's the analysis that goes into those, and how does that fit into uh, when you're thinking about the good side of it? Surely there's some parts of that that are a little iffy or scary as well. So can you comment about those two?
Sure. Look, I think it leads back to something I said just a moment ago, where it's about picking your spots. And in this case, I would say that security selection is paramount. So we want to have a good understanding of the underlying fundamentals of these businesses, ensure they're generating adequate returns on invested capital, and have sound balance sheets. And I think through that lens, there are several different places that I think look interesting. So, for example, we think that the bonds of Outfront Media are really interesting. We think that both the bonds and stock of Lamar Advertising are interesting. And within Clear Channel, I think has a lot of interesting opportunities. One security of Clear Channel that we've liked for a really long time is the international business of Clear Channel. So Clear Channel is a large international business, predominantly in Europe. And in COVID, when a lot of these companies needed emergency liquidity as a result of the market shutting down and people not traveling, Clear Channel collateralized a lot of its assets over in Europe, predominantly the ones in the UK, and somewhat in the Netherlands. And this created a whole new security, guaranteed and collateralized just by the European assets, with a very low leverage ratio and very tight financial covenants. And what these covenants did is they prevented the cash flow that was being generated by these assets from being sent back to the parent company for the benefit of other bondholders or stakeholders that might be elsewhere in the capital structure. And so you had a very secured, ring-fenced group of assets and security that created a really interesting yield opportunity. So we've liked that part of the business for a really long time. And on top of that, as we tend to look for with most of our investments, we look for corporate events. Clear Channel is unique in that, unlike Lamar and Outfront Media, Clear Channel is not a REIT. Outfront and Lamar are. And both of those businesses benefit from the tax advantages that can come from being a REIT. And generally also, I think they would argue they earn a higher valuation multiple for being a REIT. And Clear Channel has wanted to become a REIT, but you can only have so much of your assets be foreign if you want to be a REIT. And so because it was important for the parent company of Clear Channel to become a REIT, they needed to sell or otherwise divest their foreign assets. And so this created a really interesting setup where most likely the European assets would be sold. In fact, the company had told you as much, that they were running a process, they wanted to sell these assets, and eventually that is what they did. We knew that they would likely be successful in selling those assets, not only because they wanted to get that done to help unlock a potential REIT status for themselves, but also to get the cash out of those subsidiaries, because as I mentioned, they had pretty stringent covenants. So, and as it happened earlier this year, they did announce that they were selling that international business. That loan that we that we like will be going away.
Hmm. I like it. Well, let's change gears a little bit. Let's go to another maybe non-obvious real estate market. The energy space has lots of these stuff. What are you seeing there that could be interesting or something for us to be thinking about?
Well, we really like things that are not obvious.
Mm.
And one that I want to highlight is we think that Phillips 66 stock is pretty interesting. I think many people might think of this as just a refinery business, and in fact, if you look at how the stock has traded, over the last year, crack, which is the VanEck refinery ETF, is down, 15% over the last year, and Phillips 66 is down about 12%. So it's very, very highly correlated with refinery equity market. But if you lift up the hood, actually, Phillips 66 is almost anything but just a refinery. In fact, I would tell you that refining makes up only a small portion of the company's overall business. They've got a large marketing business with over 7,000 branded gas stations and other locations in the US, nearly 2,000 internationally. They have a large midstream business. They have a large chemicals business. And these are all real assets that have differentiated characteristics that do not appear to be reflected in the value of the company.
Hmm.
And that on its own has all the characteristics of something being set up to be a value trap. Lots of assets, doesn't appear to be appreciated. So what? You need a catalyst in order to unlock that value. And what makes Phillips 66 interesting is that they have an activist involved in the company. There's a large, I would say, aggressive investor who's involved in the company, pushing for change, nominating their own board members, arguing that the company should take corporate action, such as either selling or spinning off their midstream business, their marketing business, and their chemicals business to unlock value. And we think that's a really interesting setup. And when you think about how that plays with a market like you have today, where there's differentiated tariff news every day. I mean, like if you asked me today what's going on with the tariff situation, it's different than what you could have said about it 2 weeks ago, right? And so the market is moving very quickly, particularly with regards to geopolitics. But something like what's going on at Phillips 66, when we're talking about potentially selling or spinning off major parts of the business, I mean, those corporate events, they take time. There's tax work, there's structuring, there's shareholder considerations. Like these things do not happen overnight, but they're in progress. You have an advocate for minority shareholders in the mix, and nothing's for certain, but you have a large investment by a motivated shareholder pushing for these changes. And so, we think that that's an interesting opportunity. In the meantime, the company pays a dividend yield. It's not the biggest dividend in the yield in the world, but it's something. And I think you get an option on what happens in the future. And so that's an interesting event-driven sum of the parts setup that we find interesting. That is not necessarily obvious from a surface level.
Yeah. Well, that's a great one. Well, maybe in our last minute here, I got to ask you one about that goes in and out of the news in interesting ways. And that to me is commercial real estate in general. There was a time when it was very in the news when some of these local and regional banks were having lots of trouble. CMBS securities were in the news, and then it went really quiet, which to me makes me think, well, if it's really quiet, maybe it's interesting. Do you guys have a thoughts on commercial real estate at all and where we are in? Is it interesting yet? Do we still have some more downside before it gets interesting? Any off the cuff response there?
So I would assume that just because you don't see something in the news every day, I wouldn't take that as an all clear
Mm.
signal. And in fact, it may mean nothing more than there's a new shiny object that everyone wants to talk about. So I don't know if we have anything particularly novel to bring to the table about where commercial real estate sits today. Although I can tell you that one thing that has become more topical in the space is commercial real estate businesses with exposure to the government as a tenant. Historically speaking, I think it's really been looked as a positive to have so much of your tenant mix tied to the U.S. government. Supposed to be a pretty good credit, pays its bills on time, probably isn't making big decisions very frequently. But when you have someone like Elon Musk and helping out the administration and the Department of Government Efficiency, looking at all the contracts,
Yeah.
I wouldn't be so surprised to see some of these real estate and other commercial contracts that the government signed up for maybe go away entirely or be renegotiated, particularly if they think that they're not getting a good deal. So I think that a traditional narrative that high government exposure could be a positive, investors might come to question that.
Mm. Hey, well, that's a great, especially with the real estate tycoon in the Oval Office. That might be interesting slide. Well, that Spencer has been a great call. Such an interesting and dynamic way to approach this space. We love it. That's why we love you guys. For you on the call, we popped up a poll real quick. Additional ways to get information if you'd like to hear from me or from a portfolio manager or get on our drip list for some information, please go ahead and fill that out. But remember, this is a monthly call. It's always changing and moving, which we love about it. It's the second Wednesday of each month. Spencer, thanks so much for hopping on today and for this great content. We appreciate it. And we'll be back with you next month. Thanks for your
Yep,
time.
thanks for having me, John. Appreciate it.
All right, everybody. We'll see you next month in April. Have a beautiful day.